Goldman Sachs predicts Ethereum to take over Bitcoin as the #1 cryptocurrency. The value of cryptocurrencies, including Ethereum, has been on the rise in the past few years. As also said, the technology move will reduce its impact on the environment. The rise in Ethereum's value is more stable, and more people will be trading in it after the transfer to proof of stake. Ethereum may become more environmentally friendly than Bitcoin. It will boost public confidence and increase investment in it. Hey guys, welcome back to Crypto Global, a channel where we give information to you about investing in crypto. Please like and subscribe if you're new here to get everything you need to know about cryptocurrencies. In today's video, we'll talk about Ethereum, its advantages and disadvantages, a brief comparison between Ethereum and Bitcoin, and about the predictions of Ethereum taking over Bitcoin as the #1 cryptocurrency. What is Ethereum? Ethereum is referred to as a second most popular cryptocurrency after Bitcoin. Unlike Bitcoin and the other virtual currencies, Ethereum is considered to be more than just a medium of exchange or a store of value. It's basically a decentralized computing network built on blockchain technology. It lets you send cryptocurrency to anyone for a small fee. It also powers applications that everyone can use and no one can take down. Ethereum is programmable, so you can also use it for lots of digital assets. This also means that Ethereum is for more than payments. It is a marketplace of financial services, games, and apps that cannot steal your data or censor you. Ethereum is undergoing an ambitious upgrade, Ethereum 2.0. This would see it move to a proof-of-stake model, which relies on stakers who already hold some Ether to process new transactions. Crypto investors say the upgrade should help the Ethereum network run at scale, processing lots more transactions at a faster pace and supporting apps with millions of users. It could also lead to short-term price appreciation. Token holders seeking to become stakers and validate transactions on the new network are stashing more and more Ether away for a lockup period. This could, in theory, limit the available supply of Ether. Ethereum versus Bitcoin. Bitcoin's primary use is as a virtual currency and store of value. Ether also works as a virtual currency and store of value, but the decentralized Ethereum network makes it possible to create and run applications, smart contracts, and other transactions on the network. Bitcoin does not offer these functions. It's only used as a currency and store of value. Ethereum also processes transactions more quickly. New blocks are validated on the Bitcoin network once every 10 minutes, while new blocks are validated on the Ethereum network once every 12 seconds, says Gary DeWall, chair of Catton's Financial Markets and Regulation Group. In addition, future developments could speed up Ethereum transactions even more, he notes. Last, there is no limit on the number of potential Ether tokens, while Bitcoin will release no more than 21 million coins. Ethereum is another use case for a blockchain that supports the Bitcoin network and theoretically should not really compete with Bitcoin. However, the popularity of Ether has pushed it into competition with all cryptocurrencies, especially from the perspective of traders. For most of its history since the mid-2015 launch, Ether has been close behind Bitcoin on rankings of the top cryptocurrencies by market cap. Will Ethereum overtake Bitcoin? Although the performance of Bitcoin has been the major driving force for professional and institutional investment in the cryptocurrency space, there is now an undeniable growing demand for Ethereum. Bitcoin is the pioneer of cryptocurrency that began the blockchain movement. It's the best-known crypto and has birthed more mainstream derivatives products. However, despite being recognized as the best-performing asset of the past decade, Bitcoin also appears to be losing its market dominance as many are recognizing the potential of Ethereum over the long term, which may yet knock Bitcoin off its perch. Ethereum has been on a tear since breaking through the US $3,000 level on May 3rd, its price hitting a new all-time high of US $4,346 just over a week later on May 12th. Multiple factors are driving Ethereum's price rise, from institutional adoption to decentralized finance and non-fungible tokens. The biggest threat to Bitcoin remains Bitcoin itself, with the continuing creep of government regulation and the ongoing tag of financial crime driving market behavior. Ether has the advantage of being associated with Ethereum. Despite this, while Ether is clearly a competitor to Bitcoin, bearing in mind that the combined market capitalization of both is way south of the market capitalization of some of the world's biggest companies, there is room for both at present. Ethereum benefits. Large existing network. The benefits of Ethereum are a tried and true network that has been tested through years of operation and billions of value trading hands, says Fromm. It is a large and committed global community and the largest ecosystem in blockchain and cryptocurrency. Wide range of functions. Besides being used as a digital currency, Ethereum can also be used to process other types of financial transactions, execute smart contracts, and store data for third-party applications. Constant innovation. A large community of Ethereum developers is constantly looking for new ways to improve the network and develop new applications. Because of Ethereum's popularity, it tends to be the preferred blockchain network for new and exciting decentralized applications, says Avital. Avoids intermediaries. Ethereum's decentralized network promises to let users leave behind third-party intermediaries, like lawyers who write and interpret contracts, banks that are intermediaries in financial transactions, or third-party web hosting services. Ethereum disadvantages. Rising transaction costs. Ethereum's growing popularity has led to higher transaction costs. Ethereum transaction fees, also known as gas, hit a record $23 per transaction in February 2021, which is great if you're earning money as a miner, but less so if you're trying to use the network. This is because, unlike Bitcoin, where the network itself rewards transaction verifiers, Ethereum requires those participating in the transaction to cover the fee. Potential for crypto inflation. While Ethereum has an annual limit of releasing 18 million Ether per year, there's no lifetime limit on the potential number of coins. This could mean that as an investment, Ethereum might function more like dollars and may not appreciate as much as Bitcoin, which has a strict lifetime limit on the number of coins. Steep learning curve for developers. Ethereum can be difficult for developers to pick up as they migrate from centralized processing to decentralized networks. Unknown future. Ethereum continues to evolve and improve, and the ongoing development of Ethereum 2.0 holds out the promise of new functions and greater efficiency. This major update to the network, however, is creating uncertainty for apps and deals currently in use. Overperforming Bitcoin. In the last 12 months, the price of Ethereum has outperformed the price of Bitcoin, with Ethereum added about 1,000% compared to the 300% price of Bitcoin, even considering the crash of the price of the last week. In the meantime, some believe long-awaited updates to Ethereum, which began at the end of last year and aimed at helping the Ethereum scope and reducing its high cost of transactions, could allow the Ether price to reach unprecedented heights. Ethereum uses proof of work to keep the network running, like Bitcoin. Complex technology calculations involve the use of an army of computers that consume excess energy. Experts estimate that the use of Ethereum in Libya is 45,000 gigawatts. Losing the energy is, however, by design, and this disincentives people who want to game the system as it eats into the potential income. Goldman Sachs prediction. The Bitcoin price has lost almost 50% of its value since reaching its all-time peak of nearly $65,000 per Bitcoin in April. Meanwhile, after rising to over $4,000 per Ether, ETH is reduced by more than half earlier this month. Ethereum is one of only 2 coins with the cryptocurrency sector breaking 4-figure values. The leaked report by Goldman Sachs has given Ethereum the second most potent cryptocurrency with a market capitalization of about $250 billion over $660 billion market cap of Bitcoins, a high chance of overtaking Bitcoin as a dominant store of value, calling it the Amazon of information. Volatility in the crypto market has been high for the past week. Bitcoin and cryptocurrencies plummeted, wiping $1.3 trillion from the aggregate crypto market price. Goldman Sachs analysts wrote that in the light of the importance of actual applications in value store determination, Ether is likely to overtake Bitcoin as its predominant store of value. Ethereum has helped rise over the last year, with the so-called decentralized finance gaining prominence using cryptocurrency technology to replace banks with blockchain-based protocols and replace conventional financing instruments such as loans and interests. So guys, that's it for today's video. I hope it could be a big help to you. Let us know in the comments. Don't forget to click the bell icon, and thank you for watching.